By way of background, I studied law, practiced law, and then went off to do an MBA and at Western. And then I started off my first real job in life as an investment banker in 1980. And because I had studied tax law, I did tax-oriented deals, and that got me into flow-through shares. I did the first flow-through share deals ever in Canada in the 1980s, and then decided a better way to do flow-through shares would be to create a fund. So I spent the next 5 years after doing the first 3 ever flow-through share deals creating flow-through share funds, and those became extremely successful. Raised in my entire life about $3 billion of flow-through shares, but in the first 5 years raised about $1 billion and had to invest them all. And I was a co-founder of the flow-through share funds. They were called NIM. And we had 9 limited partnerships over the course of 5 years. We invested in 400 different junior mining companies in Canada and oil and gas. And that's how I learned mining. And then I went on, and I was practicing as an investment banker as well at various firms. I then went on to serve on boards of directors and finance mining companies and make a career out of it. In the last 10 years, I have been involved in clean technology, but I'm still I still serve on boards of public mining companies. I still have some clients. I do consulting now. I still have some clients who are in the mining business. So, and once you're in mining, you can't leave mining. You think about it all day. So, so I'm still in mining. I was asked a few years ago actually, we're going back to 2015. So that was 10 years ago by the Prospectors and Developers Association of Canada. I was asked to deliver a speech in 2015 to prospectors and developers because the mining industry was dead. And all these junior mining companies were in trouble. And at the PDAC, they said to me, JP, you've invested all this money, you know junior mining. They want to hear a speech on how to survive in a crisis financial market. So I had never done that before, but I started putting together ideas on a slideshow, on a slide deck. And when I finally presented that speech, it was a big hit. It was inspiring, and it was directed originally to junior mining companies. But then I started writing blogs on individual concepts that I had talked about in that speech, and then went on speaking tours across the country to various mining organizations and conventions. And that speech evolved over time. So what's happened is 10 years later, that original speech on how to survive in mining ended up being how to survive if you're a junior company, or how to survive any business. And because I'm in the strategy consulting business now, that whole presentation has evolved. My thinking on it has evolved too. And what we're going to talk about today is a lot about my own personal thoughts on how to make an investment decision in mining. So that's kind of in a nutshell what I do. I guess I should also mention I'm on the board of a public company. I'm on several boards of public companies, but Dynacert is listed on the Toronto Stock Exchange. I'm also involved in a startup company in the hydrogen business called Cipher Neutron, which is developing advanced electrolyzers. I'm involved in Sago Resources, which has a copper gold porphyry in British Columbia, a very interesting property. I'm involved also with Minova, which is it's a public junior mining company that is launching into creating a hydrogen hub. Unfortunately, in a place where there's a lot of forest fires right now near Flin Flon. So it's we don't know what's going to happen there, but I'm involved in public companies on a daily basis.
So everyone, sorry. So everyone that's here, as JP goes through his presentation, When you think of the question, please type it into the Q&A chat and we will get to those at the end of the presentation. But as soon as you think of something that's relevant, throw it in there. As I've now enabled the chat, please, say hi, where you're from. Again, we want as much interaction as possible with everyone because I feel like that is the best educational tool here, is that everyone gets an idea of how they're investing in commodities, what they're looking for, and then we can kind of gauge the questions of how many people are interested in each different space. So we're officially on time. We're a little early, but JP, if you want to be ready to go, then we will get started into the presentation.
So this presentation is probably not your usual mining presentation. I've been in the mining finance business for 40 years. And over those years, I've developed a way of thinking. I've been involved as an investment banker, but also as an investor. So I believe this presentation is particularly geared to helping investors decide whether to invest in any particular junior mining stock. And there are lots of great people who have a lot more knowledge than I ever will have about mining. But on the other hand, having been there for 40 years, I kind of know a little bit my way around. But I think of mining differently. And this is what we will be talking about. I think a lot of people have seen this slide before. This is Microsoft Corporation in 1978, and the question asked, would you have invested? Not an original slide, but essentially this is what my presentation is about, except it's in mining. And the first thought to understand is that to be a prosperous investor, you've got to identify winners. And that's probably the key element of investing in mining. And I go a bit further and say, you've got to be the first to identify success. You don't want to follow the crowd. And the way I look at being the first is one analogy is to look at, say, a movie. You watch a movie for 10 minutes, and usually most people after 10 minutes say, I like this movie, I don't like this movie, I don't want to watch it, turn it off, put on another movie. If you're like me on Netflix, you're continually looking for better movies. But in the first 10 minutes, you can usually tell if a movie is going to be good. And I have a few stories on that, and I'm going to pause here, and I'm going to run through my slides a lot faster, but I think it's important to talk about how I developed this 10-minute into the movie kind of thinking. I was involved in Detour Gold, one of North America's largest gold mining companies. I was involved with it at, I would say, the very beginning, and it's Detour Gold 2.0, which was after Placer Dome had sold it. And this was in the year 2000. The company approached me and said, you want to be our underwriter? And mining business was very tough back then. Everybody was into .coms. Nobody wanted to hear about mining. But I took it on because I saw something in it. Most of my colleagues on Bay Street who were in mining were saying, JP, what are you doing? This is not going to work. Placer Dome's turned it down. But at the end of the day, we did a PowerPoint presentation and nobody wanted to take a meeting. But I happen to know Eric Sprott, so I asked him for a favor. I said, could you please listen to the presentation? So he said, okay. I was at the time in the Royal Bank Plaza. He was in the elevator bank next to mine in Royal Bank Plaza. So we go down my elevator, go up to see him. We get there. Eric sits down and he's being polite. He doesn't want to be impolite, of course. He's very gracious. And as my client is talking about what Detour is, and we hardly had anything to talk about back then because we hadn't done much work. Anyways, he's flipping through the deck. And he goes to one slide and says, is this true? Is this, this is a slide that I had insisted be in there. It was a comparison slide comparing the large gold deposits in North America with each other, and Detour was one of them. And I said, yeah, I did this slide myself. I can tell you the numbers are right. He says, okay. And he looks at his watch and he goes, JP, I got to go. Okay. So he ushers us back to the elevator. And as we're waiting, he almost pushes us into the elevator because he's got to run to another meeting. And then he says, by the way, how much money do you need? And the number was $1 million. And that was a lot of money back then. It still is today sometimes for some companies. But he says, okay, I'll take it. And I'm surprised, as much as my client is as well. I'm like, really? Okay. And as the elevator doors start to close, he says, "What price?" We hadn't even thought of price, but I said, "Well, it trades by appointment at 5 cents. So I'll give you the stock at 5 cents." He said, "Okay." And he says, "Is there a warrant?" And now the elevator doors are literally closed. And we're inside and he's outside. And I yelled through the elevator doors, "Yeah, I'll give you a full warrant at 10 cents for 3 years. And my client looks at me as we are going down the elevator and says, "JP, was that a deal?" And I said, "Yes." And so that was one of my first times that I realized there are people who make decisions in 10 minutes. And by the way, that was a very good decision on Eric Sprott's part. I'll tell you another story because it's not just one story, a 10-minute story. I've got 20 10-minute stories, but I have to tell you this other one as well. We've all heard about the Ring of Fire, probably Ontario's largest mineralized deposits. Dick Nemus was a friend of mine. He was a mining prospector, and every year I was running flow through share funds, and every year he'd come to see me in September and say, "JP, can you please finance my company?" The company's name was Noront. And I would say, "Sure, Dick, what are you going to do this year with the money?" And the stock was doing okay, but not doing much. One year, and he used to invite me every summer to go fishing in August with his other friendly prospectors. Well, turns out I had not gone to any of these fishing trips. I'm not a fishing guy. The idea of going in Northern Ontario, getting bitten by mosquitoes is not my idea of having fun in the summer. So I'd always graciously say no, but every year in September, he'd come back from the fishing trip and pitch me on his deal. So this year I said, I don't have much time. Let's go to a restaurant. We're there early. It's 11:30 in the morning. We're alone in the restaurant, except there's one other guy 2 or 3 tables away. And Dick starts telling me, "So let me tell you what happened." I said, "Dick, don't talk to me about the fish. I really don't have time." He says, "No, this is about the beaver." I said, "The beaver? What, you went hunting?" He says, "No, the beaver aircraft." I said, "Okay, tell me more." He says, "Well, this old beat up beaver that's on pontoons. We look for a lake to land to go fishing. And the compass on the beaver, we use old instruments. And it's a magnetic compass. And as we're looking for a place to land on a lake, the compass starts spinning in circles, and it goes boom, boom, and it goes boom." And Dick was very expressive, of course, and he makes a big loud noise and goes bush, bush, bush. Does it? So we turned around and retraced our steps, and the compass did bush again. And then he retraced our steps and did bush again. And right at this point, he's made 5 or 6 bush. And I said, "So you must have flown over a magnetic anomaly." And he says, "Exactly. JP, this is the size of Sudbury. I want you to finance me." I said, "How much money do you need?" He says, $500,000 to go stake it. We haven't even staked it yet. We have to go stake this. So meanwhile, this gentleman smoking a pipe comes over to our table and says, "Excuse me, gentlemen, I couldn't help but overhear your conversation." And he turns around to me and says, "JP, you probably don't recognize me. I'm Mr. So-and-so." And I go, "Oh, yeah, Mr. So-and-so, by the way." I won't say his name, but he had invested in a lot of my junior mining deals. And he says, "Can I sit down?" And Dick is saying, "We haven't staked this, JP. We can't tell anybody about this." I said, "Dick, listen to Mr. So-and-so." And he says, he hears the story. After 5 more bzzz in the air, Mr. So-and-so pulls out of his pocket a checkbook and says, "How much money do you need?" And Dick says, "I need $1 million to go stake it." And Mr. So-and-so starts writing $1 million check. And he says, "JP, should I make this out to your firm?" I was running a corporate finance department of a securities firm. I said, "Yes, make it up to the firm." And that was the first check that went into Noront when they discovered the Ring of Fire. So they went out, they staked it, and the rest is history. But a lot of people don't understand the decision to make that investment was made by a person who was, an expert in mining, but it was made in 10 minutes. So those are 2 stories of how it is possible to make decisions in a very short period of time, knowing very little about a property and being extremely successful at it. And by the way, I've experienced this many times, and if I have time, we'll go through more stories. Everybody's heard about Bre-X, but very few people hear in the news about the winners. And what I try to do is talk about the winners, not the losers. So let's look at the facts. There are about 4,000 mineral properties in Canada right now. There are out of those 4,000, it's an interesting statistic, but in the last 40 years, there's only been 40 mines that have opened up in Canada. So that means on average, there's one mine that opens up per year, and there's 4,000 candidates to choose from. So let's look at this pyramid. There are 4,000 junior exploration companies or junior exploration properties. Exponentially fewer than these, a smaller number have actually a PEA or preliminary economic assessment. An even smaller number have a pre-feasibility study. Even smaller have feasibility studies. And even a minute part of that have actually financed. And out of those that have actually financed and have all the everything else, there have only been 40 successful mines in Canada in the last 40 years. So the odds are stacked against investors to invest in mining. Another way to depict this is to put these on a bell curve, and where success is the vertical axis and the horizontal axis moving towards the right is how people think. And if all the mining companies, the 4,000 companies, were put into a bell curve, you'd find that the 40 mines are 4 standard deviations away in the thinking curve. 99.9% of the other companies are basically conventional Me Too thinkers. Leads one to believe if you want to find a mine, and by the way, finding a mine is not the only way to make money in mining. But let's just say that if that is the objective of a mining company, is to discover a mine or create a mine, then you obviously have to think differently than the rest. And the question then becomes, how do you think differently? Well, I call these 40 companies outliers. So I'm going to use the expression outlier throughout this presentation. And I'm going to talk first about, let's understand how outliers think. Because as an investor, even if you don't know too much about mining, you can certainly figure out if the person you're talking to, the CEO or the executive of the company, is an outlier or not. And if they're not an outlier, you can't necessarily expect that they will create a mine. So if you're looking for mines and you're at the beginning of this movie and you don't know how the movie is going to unfold in the next 5 or 10 years, what do you do? What do you look for? Well, you look for outliers, and one characteristic of outliers is they think outside the box. They're creative thinkers. They don't think like most people. They think differently, creatively. So that's one characteristic. I won't get into all the stories at each one, but they also simplify, outliers also simplify very complex challenges. So building a mine is a continual barrage of unexpected results, difficult problems to solve, whether it be metallurgy or exploration or just mine building, processing, whatever. All along the way to becoming an operating mine, there are stacks of different kinds of challenges. So one of the characteristics that you're looking for in an outlier, in the executives to build a mine, is, do they have the ability to simplify complex challenges? And the expression I give is, or the example I give is, and this is a true story, university students were given 3 hours in a 32 blank booklet to write in a philosophy class an answer to a question worth 100% of the course mark, was, what is risk? And one student out of the class wrote a few words on the front page, handed in his exam booklet, didn't wait for 3 hours, just walked out of the room. And all he had written was on the exam booklet was, this is risk. The reason I tell the story is because he had taken a very complex philosophy class and distilled it to simplified it to 3 words. And obviously he got 100%. True story, I know the person. The other stories are, outliers understand other outliers. They intuitively know what it takes to be an outlier. So again, that's an important characteristic to find. Outliers are nonconformists, and they use nonconformist ways of creating mines. Again, let's understand, we're talking about 40 out of 4,000. They're not going to do the same as the 3,960 others that are out there. you'll remember this one if you like to watch movies. And by the way, a lot of my presentations started off as movies and then songs, and now I'm into caveman. But I kept this slide. This is Pirates of the Caribbean. Captain Jack Sparrow is a pirate who pirates a ship, and he's got this famous compass. And there's a famous line in one of the movies is, true enough, this compass does not point north. You'd think if you have a compass that doesn't point north, what's it good for? Well, he says it points to the thing you want most in this world. And nonconformists don't necessarily use the compasses that everybody else uses. So I use the word compass metaphorically, of course, but it'll give you food for thought. Another thing about nonconformists and outliers is they foster debate. They know they don't know everything, and they usually find themselves, like in mining, in impossible situations to solve. Every mine in the world there's no book on how to make a mine. There's no cookie cutter formula. Every deposit is different. Every mine is an epic. Every story of a mine is an epic. There's hundreds, thousands of people. There's different problems to solve. I grew up in the age of the first version of Star Trek, where the Starship Enterprise would find itself at the beginning of an episode in impossible situations, but the solution was always the same. And the theme was Captain Kirk had two different people, Mr. Spock and Dr. McCoy, who were totally different people. But what Captain Kirk did right to solve his impossible missions was he fostered debate amongst his entourage. I have found, in my experience, outliers that create minds foster debate. The other thing is outliers behave very fearlessly. Apple Computer, before it was a famous company, had an ad campaign, and I'm going to read it very quickly, just 2 or 3 lines from it, because that is what you're looking for when you're looking for the CEO that's going to create a mind. And this is what Apple said. Think differently. Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules, blah, blah, blah. And you can't ignore them, but they change things. They invent, they imagine, they heal, they explore, they create, they inspire, they push the human race forward. And Apple goes on to say, we make tools for these people because the people who are crazy enough to think they can change the world are the ones who do. And the analogy here, the fearless analogy of the outlier CEO is they have this idea that they're going to create a mine, and they are the ones who do. They're fearless about their idea. Other important concept, and I'll refer to this many times in this presentation if I have time enough to give the whole presentation, but is outliers filter out a lot of futile information. So let's talk about in mining. We have a lot of data that comes to us. If you're a professional operating in the mining world, if you're a CEO of a mining company or a director of a mining company or a geologist or whatever role you play in the mining exploration world or even mine creation world, development world, you're inundated with data. You have assays, you have contour maps of geophysical anomalies and geochemical anomalies, magnetic anomalies, whatever is at the exploration stage. But then you have feasibility studies, all sorts of other inundation of data. Outliers actually have a gift of filtering out the necessary information and not getting bogged down with the plethora of information out there. And the analogy, I've always wondered, why is it that these outliers manage to do that, and how is it they do that? Because it's always good to try to imitate outliers. Anyways, the best analogy I can say, it's a bit like wearing Polaroid sunglasses. When you look at a scene, you're typically, without the glasses, you're typically blinded by glare. When you put on the Polaroid glasses, the glasses filter out part of what you're looking at. You're getting less information coming to your eyes. And because you're getting less information, less of the glare, less of the blinding light, you get to see the beauty or whatever it is you're observing. You get to see it properly. So outliers have figured this out, especially in mining. They know how to deal with a lot of information. There are many ways to identify outliers, and I think my homily of the day is for every investor listening, you'll find your own way of doing it. One of the stories I have is I found my way accidentally. I was at a mining conference in 1992. Mining markets were dead, kind of like now. Nobody wanted to invest in mining. Mining convention was going fine. This was in New York, by the way. And after 3 days, I was a fund manager, so I knew almost every company out there. After 3 days, there's nothing. It's nothing but rubble. I can't even see a good opportunity to finance or to invest in as an underwriter. So I'm at the bar at last call, and I see a few tables away, and I don't know these people. Surprisingly, these are probably the 5 people in the room I didn't know. And they're ordering pink champagne at last call, bottles of pink champagne, more than one each. And they're probably going to go to their rooms and party all night. And I say to my friend who's sitting with me, who are these people that are breaking out pink champagne in this terrible market? He says, oh, JP, I can introduce you to them. Do you want to? I said, no, it's too late for the introduction. Just tell me their name. So he gives me the name of the company. Next day, I fly on the flight from LaGuardia to Toronto, call my broker. In those days, we didn't have cell phones. I used a payphone at the airport. And I said, how much money do I have in my RSP account? How much cash do I have lying around? And he gives me, you have X $1,000. I said, okay, buy it all into this company that I've never heard of, know nothing about it. He says, okay, you sure you want me to do that? I said, yes. At the open, this was before the open. At the open, just load up with this. When I land, I realized, what have I done? I bought a junior mining stock that I know nothing about. So I pick up the phone at the airport and I say, and my broker says, okay, well, there's good news and bad news. The good news is you bought it $4. The stock is trading at $8. So I said, well, let's sell it. That was a double in 3 hours. I said, what could the bad news possibly be? He says, well, bad news is compliance. I was an investment banker at the time working in a brokerage firm. Compliance wants to know how you knew to buy this stock right before a press release. And I said, oh, okay, I better go explain that. So I go to compliance and we call the Ontario Securities Commission. And by the way, these guys are doing their job. They should be asking these questions. And I explained what happened. I don't know the name of I just know the name of the company, never met the people, never looked at, I couldn't even tell you what the people looked like. I've never spoken to them, never looked at any analysis on them, never even read a press release on them. All I saw was they bought pink champagne. And that was enough information for me to make an investment decision. Again, this is the first 10 minutes of a movie. I'm not suggesting you go out and buy stocks just because people are drinking pink champagne. But by analogy, everybody has to find a way to make a decision early on. And again, this is unconventional. Outliers are also innovators. There's a great movie called The Imitation Game. If you haven't seen it, it's about the Allies trying to break the code of the Enigma machine, which was a machine that was carried on submarines of the enemies, where the Enigma machine could decode coded messages that were sent via radio. The Allies could intercept the radio, but in Britain, they decided we got to break the code to know where these submarines are. And the story is about a guy who you would think nothing of. He's done nothing in his life, or that's the way he's portrayed in the movie. And he ponders, how is he going to break the code of the Enigma? And to do so, he creates the first computer. Because in order to figure out all the permutations and combinations of the Enigma, he figures he needs something like the computer. And he invents the computer. And true story, that was the invention of one of the first computers. In fact, a company that launched IBM. So why am I telling you this story? Because I've seen this in mining, where very often there is an impossible problem, and real outliers, real mind builders, they'll figure out a way to invent a solution. They figure out something that doesn't exist to solve a problem that they encounter. Another important characteristic of outliers. Outliers are willing to test new ideas. They question the conclusions of their peers. They embrace complexities, and this is almost the opposite of what I said before. They'll take a very simple concept and see that it's how complex it really is. In this case, I have a picture of the Mayan pyramids because the pyramids have been around for 4,000 years, and they're held together by a mortar that consists of the sap from trees, which is used as bubble gum mainly, but by mixing the sap from trees with limestone, the Mayans figured out that they could make a very long-lasting cement that can last 4,000 years. I guess they didn't know it would last that long, but it does. That's why we have pyramids still standing today. So some people will say, well, these pyramids are held together by bubble gum. Okay, that statement is true. But the outlier will say, well, wait a minute, it's much more complex than that. Now, we see this in mining a lot as well. People will say, oh, the ore body extends in this direction, blah, blah, blah. The outlier won't accept that. The outlier will question those complexities, no matter how simple it looks like. The most important thing about outliers is they think counterintuitively. Counterintuitive thinking means seeing the solutions to problems that are not evident to most logical thinkers, but are very evident to people who think counterintuitively. And on that note, it's important to understand, logical thinking is not the only way to think. And the Me Too thinking of being a mining executive doing like everybody else is not necessarily counterintuitive. The outliers, the 4 standard deviations, the way that build mines, they think counterintuitively. And I give the example of, if you want to understand an example of counterintuitive thinking, write this down, or you'll see it if you get my presentation one day, the Monty Hall problem, which is a well-known probability problem where you're presented with 3 doors, 1 door is eliminated, you now have 2 doors for a prize. You have 50 chance that the prize is behind one of the 2 doors, and the host of the game show says, do you want to switch doors? And most normal, logical people will say no. There's still 50-50 chance. Well, the reality is, if you think counterintuitively, and this would take too long to explain, but the correct answer, you should switch those doors, switch your choice, even when there's only 2 doors left. So you can look that up, understand a bit more about it. In fact, this is a pretty good trick, because if you're not sure if somebody's really a counterintuitive thinker, you can give them this problem and see how they answer it. And that will very often, I use it myself, very often helps detect whether a mining executive is a counterintuitive thinker or not. The other thing about outliers is they seize opportunities quickly. Why is that important? Mainly in financing. If in junior mining financing windows don't last a long time, they're very short in time. It's not like in mining. Generally, the cycle of financings in mining is longer than the cycle of financings in junior mining. So we often see flavor of the month. Lithium is a hot product, so junior mining company picks up a lithium property and goes and attempts to finance it. Meanwhile, everybody else is doing the same thing. Everybody's coming up with lithium properties. Not everybody. A lot of other companies do the same thing. I call that the flavor of the month club. An outlier building a mine is not going to switch properties just because that particular lithium window has opened up. An outlier is a plotter, works towards the one goal that they have, but they're always ready to take advantage of a financing opportunity. I don't want to repeat too much. The other important thing about outliers is they progress as a result of their failures. As you go up the ladder of complexity in junior mining to building a mine, the problems you encounter are different all the time and become harder and harder to solve. And most of the time, people on their way to the top of that ladder fail many times. And the frequency of failure, interestingly enough, that I've observed is the higher a company moves up the ladder of success, the more frequently they experience failures. So one of the important attributes of outliers is they learn faster from their failures. And in fact, failure allows them to learn. Okay, so outliers think they don't just think differently, they think extremely differently than the rest. They operate on solid foundations. I don't want to get into that, but this is important. Outliers learn from other outliers. So, for example, you think of in the world of flying machines, an outlier would be like a space shuttle. For those of you who remember, the space shuttle was a superb invention in the world of flying machines, and in its time, one of the best. In fact, the best, an outlier in its world. Now, you might say, what does that have to do with mining? Well, in fact, as a mining executive, I carry my own little space shuttle. And the reason I do that is because there's a lot to learn from how do you become an outlier by not introspection, by not saying, how do we do this in mining, but rather, how do other people do it in other industries? And here are a few, a bit on of how that reasoning works. Only outliers build mines. Let's assume that's what we're talking about, or by definition, outliers build mines. Important thing to know is, just like space shuttles, not one individual can build a mine. A mine takes 500 people to build at different stages of its development. A space shuttle takes 50,000 people. So the numbers are different, but it's not the CEO alone, acting alone, working alone, that's going to build a mine. Something important when you're looking at picking investments. Yes, the qualifications of the CEO is important. Don't think I'm discrediting that, but the CEO by himself or herself is not enough. They're going to need a team. And they're going to need a large team. The other thing is, mines are technologically risky, as are space shuttles, and there's no margin for error. And as we know, out of the 130 or so space shuttles, 2 of them blew up, and that has cost billions of dollars and lives. Eight people per blow up of a space shuttle. So that's cost 16 lives and multiple billions of dollars. The worst part of these, especially the Columbia disaster, was it was a $200 part. And the question an outlier has to ask, a manager has to ask, is, if I'm managing 50,000 people, how do I manage this so that a $200 part doesn't blow up the space program? And it's the same thing in a mine. If I'm hiring 500 people, how do I manage that 500 people so as to not blow up my project? And I see Cali showing up saying, JP, you've talked enough.
You know me too well. Well, we're close to the half-hour mark, so I feel like we should get to some of the questions, as we have a couple here in the chat. Do you want to closing remark, JP, before we get to some of these?
Yeah, let me do one closing remark, because I think so 2 closing remarks. The bulk of my presentation is about the 7 Ps of mining, which include people, property, price, promotion, plan, persistence, and patience. And throughout the presentation, I give examples of real-life mining companies that have applied outlier thinking to all these criteria. So for those of you who will be reading my presentation, that's where the bulk starts. But one of the important aspects of this is near the end, and I do want to at least show that picture, because it's important to understand outlier success. And
so Adrian has, what are your instincts with respect to where we are in the commodity cycle in general and the precious metal cycle in particular?
So I'm going to start by answering the precious metal cycle first. Yes, precious metals, let's say gold. Gold has always been, we always say it's in a secular cycle, but in my mind, over time, gold is always going to be a good commodity to invest in. Why? One reason. It's because fiat currency is very vulnerable. And if you look at what's going on geopolitically in the world, we're at a point in our lifetime, in our history, where there's so much geopolitical instability that will translate itself, as it has in the past, to a decline of the value of fiat currency. And for lack of anything else, here's gold that consistently throughout history has been an insurance against fiat currency. Although, I've had debates with some people who say, what about cryptocurrency? I'm not a big believer in crypto. I believe in physical gold. And by the way, I do feel it when I say gold, I'm thinking physical gold. I'm not thinking about ETFs and that kind of stuff, or gold coupons. In my mind, when things get bad, you want the physical property in your hands. With respect to commodities, obviously there is, and I've been working a lot in that, the whole critical minerals industry. And by the way, I was talking about critical minerals 30 years ago and 20 years ago. I led companies in cobalt and lithium and a whole bunch of other critical minerals, tungsten. Anyways, I'm a big believer right now in copper. And you're going to say, well, that's a base metal. How do you get to, being so bullish on copper? I like copper because copper is the supply-demand balance of copper can be understood. We can more easily calculate. If you're going to bet on something, you can at least calculate the odds. And in my mind, and I'm not saying I'm the be all and end all on the supply and demand for copper, but I'm very bullish on copper. Are you there?
Yes, I'm here. Adrian asks, in your experience, how long should one expect to wait before an investment becomes the famed 10-bagger? That's a good question.
Hey, I respect that question. It depends where in the movie where do you enter into the investment along the movie. So I didn't get to talk all about this, but the timeline is a very important thing, and timing is very important in investments, as Adrian points out. So let me give a general question about a 10-bagger. First of all, if you're looking for 10 baggers, and I think that's a good strategy, by the way. If you're going to take the kind of risk, especially in junior mining, if you're going to take that kind of risk, you expect at least a 10-bagger. And I've seen situations which were 1,000 baggers, 10,000 baggers, depending on where you go into the investment point. Obviously, the earlier on in the movie, the more risk you're going to take, and you expect you'd have to pay a lot less. So the picture that's on my screen is a bit apropos. That was in the year 2000 at the first annual meeting where a junior company featured the Detour Gold Mine. 3 people showed up to the annual meeting. I'm on the right. The 2 other people were directors of Palangio Mines. Nobody believed us back then. The stock could be bought for something like under a penny. 5 years later, it was a 20-bagger, and we were listed on the TSX, different company, but you would have made a 20-bagger 5 years later. And 15 years later, you would have made a 1,000-bagger. So, and that's what we ended up with. We went from a motley crew trying to survive to what became the largest gold mine in North America. So, yes, it takes time, Adrian, and it's unpredictable. So it's not for the faint of heart. Obviously, you have to be when you're investing in junior mining, I tell people, expect you're going to lose 100% of your investment, but expect that out of there, there are some heroes in junior mining. It's not just Briexes. There are lots of heroes out there. And if you look hard enough, you will find the heroes, and the heroes you'll always make money with. On that note, by the way, I'll tell you, I'll try to make this really quick, but I was managing a flow-through share fund that had been launched right before the year 2000. And in the year 2000, nobody cared about mining. And here I was managing a big flow-through share fund, and the Financial Post of Canada which published results back then in the newspaper every week. I was the worst performing fund in all of Canada. And 2 years later, I was the second best, or my fund was the second best performing fund in Canada. It was literally a 50,000 bagger from going in the doldrums to becoming a huge success. And the reason was the first P of my people, property, price list, people. The people we had invested in as miners were very resourceful people. And they, in the dot-com boom, where stocks were going crazy, they took their mining companies that we had invested in. We owned 10 to 20% of these companies as a fund. And these resourceful mining managers turned these dead mining companies into shells that were used for dot-coms. And they became very good at negotiating with the dot-coms to use their shells. And that's why that fund became a 50,000 bagger, and this became the second best performing fund in Canada. So, Adrian, anything's possible if you're willing to take the risk.
Another question for new investors in the sector that don't know the history of some of the major discoveries. How would you describe that experience being part of it? And maybe do you see comparables or anything in the current timeline that you feel like maybe there's the possibility of that again?
Sorry, can you start again what you said at the beginning? I didn't quite understand the question.
Yeah, for new investors that are in the sector that don't know the history of some of the major discoveries that, as you've mentioned in your presentation, how would you describe that experience being part of it? And is there anything familiar or that kind of rhymes with nowadays that you think there's maybe that potential here again?
Right. So first of all, in that presentation, I do have about 10 examples of real life experiences that I personally lived through, either as an underwriter or an investment banker. Out of the 40 mines that opened up in Canada in the last 40 years, I was involved in one way, shape, or form as an investor or an underwriter or director or officer of the company in, I'd say, about 17 of them, so almost half. And I learned a lot from that, and that's how I developed this checklist. Does that continue to happen? Absolutely. Are we at a point where we will see new mines? Probably at a faster rate. I think one of the rate determining steps of only one mine per year in Canada has not been the brains or intelligence or hard work or investment that's gone into mining. It's been the permitting process. It's been and permitting is not just getting a permit from the government. It's the social obligations that we have in mining to deal with communities, to deal with environmentalists, to deal with pollution, to deal with water, whatever. Those are very complex problems. But mankind, including Canadians and North Americans, and quite frankly, mining people around the world, are getting better at it. I think we're much better at solving permitting issues than we were in the past. So I see a rate of acceleration of successes. One of my clients right now has a copper deposit in the US, and it's not, name of the company, I don't think I can mention, it's called US Copper. Their stock is dirt cheap right now, in my opinion. They have a PEA saying the value of this copper is worth $1 billion, net present value, NPV of $1 billion, and they're trading at a market cap under $10 million. The issue holding them back is all permitting. Nothing else. It's the one thing nobody says there's no copper there, or everybody knows it's economic copper. The real issue is, will they get their permit or not? Pebble, which is owned by Northern Dynasty, one of the largest copper deposits in Alaska, and actually probably in North America. It's got a dirt cheap market cap because of it's a permitting issue. So, and permitting is a political issue as well. I mean, it's hard to not mention the T word, but Trump has said publicly, and so has certain departments of the US under the new administration, they want to fast track permitting of mining in the United States. So to me, that points to an optimistic scenario. I don't know if that answers the question, but that's what comes to mind.
We had another question about the naked short selling is a problem.
Yeah.
Is it really a problem here in junior mining stocks in Canada?
Oh, wow. I don't know who's online, but the answer in my mind, and I'm on record of saying it's categorically a problem. It is a huge problem. Mining needs financing, and naked short selling is not a friend of mining, whichever way you look at it. And by the way, I've been asked many times in my life to be on legislation committees or committees of stock exchanges or the Ontario Securities Commission to comment on different aspects of the rules that are govern what we do in mining, including 43-101. But I was particularly consulted on the one about naked short selling. I think it was 20 years ago or something. I was on a committee where the argument we were getting from the people these were regulators or stock exchanges actually, who had a regulatory mentality back then, and they still do. They were saying, but our business has become trading and we need to encourage traders, and they're asking for naked short selling. So we've got to give it to them. And, it's important for our business. Yeah. And I was saying, but that's going to crater the very existence of the mining industry and many other industries. By the way, it's not just mining. You're not alone in mining in that problem. So yeah, in my opinion, that has to go. And the only way it will go, there's two ways. One of them is convincing exchanges not to allow naked short selling. The other is to create stock exchanges that don't allow it. Let's create a new exchange or a new trading platform that can be done by the mining industry if it got its act together. If exchanges won't do it, then let's create our own exchange. Here's the story of Hemlo. I had that slide and it went away. When I was a young investment banker, 3 prospectors came to see me, and basically they came with a roadmap of Ontario, and they plotted on the map where all the gold mines, actually it was a roadmap of Ontario and Quebec, and they plotted all on the map. So these prospectors came to see me, and again, I want to talk about how they were outliers, because typically when you look at where you're going to explore for gold or for any mineral, you basically start with some kind of data. And that data will take the form of geochemical, geophysical knowledge that has been accumulated in the past. And they came with a ruler and a roadmap, and they had plotted on the roadmap where all the gold mines are in Ontario and Quebec. And they had noticed, which is true, a lot of these gold mines are collinear. They're all on the same level, on the same line. And they took a yardstick and they put the yardstick against the map, and they showed the map at part of the map that was above Lake Superior. And they said, look, JP, there's no red dots. There's no mines over this whole extension of road. And it happens to cross the Trans-Canada Highway just north of Lake Superior. We need money to go there and do some exploration. And I financed them, and not much, because it was kind of a funny way to finance an outlier. But at the end of the day, basically they discovered Hemlo right off the highway, by the way, on a camping trip one summer, using a yardstick as a tool to discover Hemlo. Now, I'm embellishing the story a bit, perhaps. I'm not suggesting that's the only tool you can use in mining. But again, this is one of the biggest mining camps in Canada, or was one of the biggest mining camps in Canada. And again, it was discovered in a way that is unconventional, so to speak.
JP, we have one more question. What would be a couple of the red flags that would make you instantly wary of a mining investment? Which is probably a great question too.
Well, first of all, okay, so I wasn't expecting that question. That wasn't planted, was it? The the first thing is it's when you're in a position like mine, looking at many mining deals, almost every one of them, quite frankly, I always encourage people, you want to show me a mining deal, show me. I'll look at it. We always learn something. So I see a lot of North American mining deals. I find it's very easy to say no, I'm not interested in that project. It's very hard to say yes. And that's not a good thing or not a bad thing. It's just the way it is. When you start looking at any mining deal, you have to, I go in with the premise that there's 1 out of 4,000 or 40 out of 4,000 that will be successful. Now, I didn't get into, there's other ways of exiting and making money in mining, but given the odds, this checklist, the 7 Ps, better all come out very positive, the 7 criteria that I use. So out of 7 criteria, it's easy to argue yourself away from almost every investment. In fact, if you're too rough, if you apply these criteria too strictly, you'll probably invest in nothing. So it's a balance. Probably the worst element is I think it's a management issue, not a property or a mining issue. But does management think long term? Are they building a deposit or just being promotional and trying to get a drill hole and getting a splashy new press release? To me, that's the first sign of, I'm not saying it's not a bad idea to have splashy press releases, by the way, but if that's what they're focused on, then they're not focusing on building a mine. So to me, that's the first red flag. Now, along the way, there's many others, and I can't think of them on the spot. But one thing that doesn't that I'm not bothered by, which other analysts, very clever analysts, are very concerned about, I'm probably more lenient on grade. In other words, show me a deposit that has crummy grades, but a large deposit, and I'm probably the first to raise their hand and say, I like that deposit, because say it's gold, and say the grade at today's price is not enough to be economical. But if you're bullish on gold and you can buy that property or invest in that property at a very cheap price, when the gold price goes up, which it will, then the grade becomes economical. So I think further ahead and say, well, grade is less important than a whole bunch of other things. Size is more important than grade, for instance. It's and different people think differently, and that's fine. That's why there's a market. There's always a buyer or a seller.
We had a comment that we had an investor that was in Goliath and Golden Scepter for the Hemlo mine.
When you mention Hemlo, whenever there's not whenever, very often when there's a new discovery or a new mine, there's very often a fight, which is a good sign. There's a legal fight around title. And one of the things I always say that I look at is, does the company have a clear, good title? And that means 2 things. If they're operating in a foreign jurisdiction, one of the reasons I never invested or told people to buy Bre-X was they never had proper title. And I didn't know about the gold. I didn't know about the scandal that was about to emerge. But when they came to me, stupid lawyer that I am, I went, hey, wait a minute, this title doesn't make sense to me. And call me when you have a good title. And later on, when this became lawsuits in Ontario, it came out that they didn't have proper title. So number one, I look for title. Sometimes that's good, sometimes that's bad. The other thing is title is not just land title. It's also the option payments that a junior company has to make. So very often option agreements are structured in such a way that there's small option payments that are required for a company to maintain its title at the beginning of its life cycle. But as time progresses, the option payments can become exponentially bigger. And that's the kiss of death, because if a company can't meet its option payments, it loses the property. And we all know that the financing market, the windows open and close. So over a long period of time, there will be many closed windows. And if your financial burden is bigger and bigger as time grows, and there's more and more smaller financial windows, you get into a cash crunch. And that's why you see, interestingly enough, you see a lot of old properties, especially if you've been in the business for 40 years. It's, oh yeah, I've seen this property before. You don't have to tell me about the property. I've already seen that be financed, and the companies, the owners lose it, and now it's in your hands or somebody else's hands. Properties pass on, good properties. They'll pass on, not because the property's not good, because management was unable to hold on to these properties in a cyclical market.